Welcome to the Gold Newsletter Podcast, your bank of knowledge of investments, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives to increase your wealth monetarily and educationally.
This is Fergus Hodgson with the Gold Newsletter. Thanks so much for tuning in. It's my pleasure to be with you. And every week we seem to have a guest or a topic as exciting as the last or more exciting. And we are exploring the future of cryptocurrencies. It's a recurring theme on the show, getting different perspectives. It's an ongoing topic. It's not one that will go away. It seems like it'll only be getting more and more important with time as the use and market share of cryptocurrencies rises relative to conventional currencies. So we have a lovely lady, Demelza Hays, joining us. Before I give her bio, Demelza, I know you're a busy woman. Thanks so much for sharing your time with us.
My pleasure, Fergus. Thank you so much for having me.
Right on. Now, Demelza came to my attention years ago as on the Mises Weekends podcast. If you're not listening to that, it's one that I do recommend. The Mises Institute puts out a bunch of great shows. But she came to my attention because she was on with Jeff Deist and explaining why she was moving to Liechtenstein, a microstate in Europe, and seeking, I guess, a freer or more classical liberal, I'm not sure how you want to describe it, life outside the United States. So she is a PhD student in economics at the University of Liechtenstein, born in Florida, and alongside her work, both studying and teaching, she is a fund manager with Incrementum, which actually deals directly with cryptocurrencies. So we have the lady for the job. Now, Demelza, what first appealed to you about this field? What made you want to be a specialist in alternative currencies?
Well, that's a great question, Fergus. Basically, my uncle, Larry Seacrest,
yes,
who was a fellow at the Mises Institute and at the Independent Institute, he wrote a book called Free Banking, and in this book, he is basically chiming in on the debate between Selgin and White and Salerno. And from an early point in my education, I was exposed to the idea of privately competing currencies. So when Bitcoin came out and when I heard about Bitcoin in 2013, I was already a person who was a bit skeptical of our current monetary system, and I was looking for solutions. So when I heard about Bitcoin, it just seemed very natural for me to continue on the path that my uncle had gone down and research cryptocurrencies, which I think in some ways is the privately competing environment, the privately competing monetary system that my uncle had written about.
Sure. And at this stage, we are almost a decade into the game of Bitcoin since its initial release. Are you surprised, pleased with its growth? Do you think it is growing too slowly, too quickly? What is your assessment of the evolution of both Bitcoin and then the, I guess, countless altcoins at this point?
I was very surprised that Bitcoin got close to 20,000 and even traded above 20,000 USD per coin on some exchanges in December.
Yes.
I was very shocked by that. I was excited when it had passed $1,000. I thought this would take much longer than it actually did, and I think that right now the market is moving very quickly, especially where I live now in Liechtenstein and in Switzerland, because the regulators have come out and announced that they are open for business in this field.
Great.
And we're seeing just a growth of initial coin offerings and token generating events where people are using this technology to capitalize their company or their startup, and it's moving very quickly and it's going in directions that I had never imagined. I think on the one hand, we're going to have a bit of a correction in the sense that I think that all markets are going to have a correction when the central bank raises rates.
Sure.
And I think Bitcoin and cryptocurrencies are going to feel some of that correction. But on the other hand, I think that this technology is here to stay and it will be around. We might not call it Bitcoin or blockchain. It might be directed acyclical graph with IOTA, but more or less the idea that a global privately minted coin that's not political, I think that this idea is here to stay.
I know you spend a lot of time explaining the technical fundamentals of both Bitcoin and other cryptocurrencies. Some of it seems, I hate to say this, but there seem to be many buzzwords in this space. Now, do you want to clarify the difference between Bitcoin and then the platform, which is blockchain or the distributed ledger, and what these, aside from use as a store of value, medium of exchange, unit of account, the basic traits of money, besides those, what is this blockchain, which is the underlying technology, and how can that be put to use in other domains?
Well, that is a very detailed question and requires a detailed answer. I teach a course on Bitcoin at the University of Liechtenstein, and the answer to your question usually takes about 9 different classes, but I'll try to summarize that very quickly. So you have the blockchain is basically a database structure. So it's a way that data can be stored. And you have 2 broad categories of blockchain technology. You have private blockchains, and this is basically just a normal database, the way you would normally store data. And the public blockchain technology is basically what is innovative in this technology, because the public blockchain technology is basically a distributed database where strangers can make changes and strangers can verify that these changes are valid. And strangers can come to a consensus on what changes are valid and what changes are not. So in a normal database where you have one controller of the database, so imagine just you store files on your computer. If you make a change to that file on your computer, nobody else knows. I mean, maybe the NSA, but nobody else really knows, right?
Sure.
Whereas when you have a blockchain, you have a distributed database, when you make a change, everybody that uses that network sees that change. So it's the same as using, for example, Google Docs. I think this is the best example.
Right.
Just imagine comparing Google Docs, where everyone is working on the same document, compared to working on Word on just your computer at home. So public blockchain is really what's innovative here, because you can basically share data now that you know is immutable, in the sense that it cannot be changed without everyone else knowing, being alerted that it was changed. And you don't need to trust anyone. This is what's innovative here. So the main use case is with sending value, and Bitcoin was the first successful application of the blockchain technology, and that's basically sending value around. And so it's just a database that sends information, but the information that the Bitcoin blockchain sends is financial information. People today are trying to use blockchain for other purposes, and I think the largest area where people are using blockchain now is they're using the technology in order to circumvent the regulated stock market. So normally a company that wants to raise capital has a few options. They could go to a venture capitalist, they could try to get a loan from a bank, or they could possibly do an initial public offering on the stock market. And what blockchain does is it basically allows you to raise capital by issuing your own cryptocurrency, which you can make in about 6 minutes. And I've made my own cryptocurrency. It's very easy to do.
Okay.
You can make this in about 6 minutes. There's YouTube videos that show you how to do it, where you copy-paste the code. You make your own cryptocurrency, and now that cryptocurrency is encrypted and secured by cryptography. It basically becomes a share in your company that can be traded on an exchange without any intermediaries. So, well, now the exchange is an intermediary, but there are actually decentralized exchanges where you don't even need intermediaries in order to trade these shares. And most companies, I mean, not most companies, but a lot of companies that are coming into the blockchain space right now are issuing their own token in order to raise capital.
Let's just clarify, because, as you said, there's just so much going on in this realm. And when people are doing these ICOs or initial coin offerings, are these substituting for actual shares in these companies or in these startups?
It depends on each company and each initial coin offering, but a lot of them are substituting for a security. The problem is that legally, investors don't have the same rights.
Sure. Yeah, there's no legal tradition. I mean, this is all just so new.
Exactly.
Right. The bit where I get confused, what you've explained is fine, in that the people are using the blockchains to create or different distributed ledgers, or as you said, forms of databases that are public to create new cryptocurrencies. The bit that I do not understand, and this is where maybe you can help me out, is the way that people claim they're going to, quote, put everything on the blockchain, including these smart contracts. What are smart contracts, and is this something actually worth paying attention to?
Okay, so to answer the first part of your question, a smart contract is basically a marketing term for if-then statement, so if X, then Y statement that you would normally just have on your own programming software. So if you use Java or Python or C++, you can make an if-then statement. Now, a smart contract is where this if-then statement is basically operating within a blockchain, which is a distributed database. So now this if-then statement is not only being stored locally on a single server database, but it's redundant and it's being duplicated and it's being stored in multiple locations, so that if somebody were to change the contract, the if part, or what happens then in that part, everybody who uses that contract would be alerted that the contract has been changed. So I think it's very interesting, because what you can do is you can have a contract now which is hosted on a public ledger where it's transparent, for example, Ethereum, and this contract can have rules that will be executed within the Ethereum blockchain. So, for example, a lot of this has financial applications. So, for example, there's an example where, Visa, the credit card company Visa, and DocuSign, the company DocuSign, came together and made a prototype where if you stop paying your car insurance, then the smart contract turns your key off so that your key can no longer start your ignition to your vehicle. So this hasn't been rolled out yet to the public, but there are many companies exploring how they can use smart contracts in order to make their systems more efficient.
That is a fascinating example that I was not aware of. Okay, because having a contract publicly visible does not seem like such a radical idea. But having some sort of enforcement mechanisms, and that's a particular case where we're dealing with a third party, the insurance company, to enforce it or to make people aware of the problem. Now, my particular interest is in the currency side of things, just because, like you, for a long time I've had skepticism of central banks. Obviously, they're sources of instability and taxation through inflation, and they enable governments to have greater indebtedness. I happen to live in Guatemala, and the state of Guatemala does not borrow from the central bank. That's actually there's a law against that. They have to borrow from private lenders, and that keeps the state more limited, which is a wonderful check. So the predicament now, though, is that we have an enormous array of other currencies competing with Bitcoin. The bit that I do not understand is that each of these cryptocurrencies apparently has its own unique attributes, making it more tailored to a niche market. Are we looking towards a future of cryptocurrencies or alternative currencies where there is not really one or a handful of dominant players? There's actually many cryptocurrencies that serve particular segments of the market. So this natural approach that we have right now to have one or two currencies in circulation, let's say I'm in Switzerland and we might have the euro and the Swiss franc, that's fine. Are we looking towards a future where actually there are many currencies just functioning alongside each other in different segments of the economy?
That would be my outlook for the future, because I think that one idea underlying the blockchain technology is that you want to have decentralization. So by storing the data in multiple locations, you're making the whole system more secure, because if one part of the data gets hacked, that's okay because the other centers that store the data are still working. So I think that if we all went to using one currency, one global currency, we would actually reduce the decentralization that we currently have with our competing fiat currencies. So I actually think that in the future you're going to have niche markets, and you're going to have people that want Bitcoin for certain reasons, or they're going to want IOTA for certain reasons. And I do think that we're going to have competing currencies. And there's technology that is trying to make these different cryptocurrencies operate together. So there's different ways, for example, something called atomic swaps that is now trying to be developed. And basically this is where you could easily switch between two different cryptocurrencies without exchange costs or transaction costs.
Right. One of the challenges people who or speculators in this realm have is that we know there are niche cryptocurrencies, and I agree that having more than one seems like a more secure idea than putting all our faith in one. Two questions really. Have you read the Bitcoin Standard, the new book out, which promotes basically Bitcoin as the be-all and end-all, as the dominant and natural monopoly in the space?
This is the book by Sefian Amos.
Yes, I published a review, not by me, but by one of my good friends, and he's from the Middle East. I can't remember his name right now, but I think you know the one I'm talking about.
I'm having dinner with him tonight, actually. That's really funny. I have read parts of it, and I think that book, from my understanding, it actually focuses more on monetary history than on technology of the blockchain, aspects of the blockchain technology. But I think that he has several good points in this book. Basically, I think that Bitcoin has certain features that make it more secure than others, and I think a lot of the market will, at least the market for store of value, will go back to Bitcoin.
Okay, yeah, so the book is, I'll confirm, The Bitcoin Standard, and we'll link to this, and the subtitle is The Decentralized Alternative to Central Banking, and the author is Safadian Amos, so that's correct. I don't consider myself qualified to make a claim in this regard, but I tend to agree with you that my preference, whether it will come to be or not, is that we have competing currencies rather than any one really being dominant. But the question then for those who are looking at this market and want to get involved is, what particular attributes of the other cryptocurrencies should one explore or assess in order to understand which ones will rise and fall in the future?
Okay, great question, Fergus. And let me try to be as analytical and concise as possible. First, what I would do is I would look at the different cryptocurrencies based on which sector they fall into. So FINMA, the financial market authorities in Switzerland, released guidelines for how to classify cryptocurrencies, and they released this in February. And they have three broad groups. The first is payment tokens, and this includes Bitcoin, Bitcoin Cash, Dash, Monero. The second category is utility tokens, and this is where you must buy the token in order to gain access to some service that blockchain offers. So for example, in order to use smart contracts on Ethereum, you must buy Ether. In order to buy storage space on SIA blockchain, you must buy the SIA coin. So that's the second category. The third category is all the rest of the coins, and this is the coins that look like security. So they actually do not need the blockchain technology at all, but they're using the blockchain technology in order to circumvent the regulated stock market, which costs millions of dollars to enter, because you have to hire Goldman Sachs and Underwriter and KPMG and a bunch of lawyers and get licensing and everything. So first I would break it up into these three subcategories, and then I would begin to decide which of those categories do you think will retain value in the future and has fundamental qualities that you want to gain exposure to in your portfolio. So for example, I personally do not want to invest in the third group, is basically like a stock market, because this is not regulated. And I understand that we don't need regulations all the time, but if you invest in something that's not regulated, there's no way for you to ensure that you have rights as an investor. So there's no court that's gonna uphold your contract that says they owe you a dividend payment.
Basically, let me just clarify. You said there actually is a new declaration or statement out from the Financial Authority in Switzerland how to classify cryptocurrencies, and they give three broad categories, which is helpful as a way to think about this. One, those for payments, which is the way we usually think about Bitcoin. One category is utilities, or the second category is utilities, and Ether is the most famous. And then the final is securities. These are not necessarily put out there for use as payments or utility functions, but actually as an alternative, maybe an agorist alternative, you might say, to the traditional stock market. And you just said that you are wary of this because while we believe in maybe self-regulation or market regulation, in the case of securities, you are dependent on the company or the one to whom you're giving your investment for the dividends. And this is just so new that it's a much higher risk.
Exactly. It's too high of a risk for us and for our investors. So we stick to the first two categories. And in those first two categories, we use a combination of information. We use a combination of indicators in order to help us decide. So first, we try to understand how much hash power the cryptocurrency has, because the hash power is basically what determines the security of the network. So for example, Bitcoin has the hash power that is a multiple of all the other cryptocurrencies.
Basically, you've just explained the three types or broad categories of cryptocurrencies, and then this term hash power. What is hash power exactly?
Hash power is what determines how secure the network is. So if the network has more hash power, the network is more secure, because in order to successfully attack that network, you would need to gain between 40% and 45% approximately of that network in order to successfully attack it. And for example, Bitcoin, that gaining 40% of the network of hashing would cost about $8 billion at the current price. So this is a huge investment. And somebody, in order to, the incentive mechanism is set up so that it doesn't make sense for you to want to attack this. Other networks, it's much more affordable to attack with what's called a 51% attack. And this is where you basically gain majority of the network. And you can basically, at that point, you can't hack people's private keys, but what you can do is you can basically stop allowing transactions to be sent to the person that actually is supposed to be the receiver. And you can basically stop the network from working at that point.
Okay, so hash power is a particular ingredient to look into. Also, which element? Do you have any particular favorites? I don't know if you're willing to share this with the public, but of alternatives to Bitcoin that you think will stand the test of time?
Well, that's a great question. Basically, this technology is so powerful that I think it's actually more powerful than the government itself. And therefore, I think that the government is going to take a stance on regulating it instead of outlawing it. And in the case that it does regulate it, I think that what they're going to do is they're going to try to track each Bitcoin and make sure that the Bitcoin are not being used for money laundering or terrorism or tax evasion. And at that point, I think that the coins that are regulated are going to be able to be traded on formal exchanges where retail investors can gain exposure. And the coins that aren't regulated will not be able to be traded on these exchanges that are regulated, basically. So the government cannot actually regulate the cryptocurrency, but it can regulate the entry points into the cryptocurrency when you have to convert between fiat to Bitcoin. So that's at the exchange level. So for example, they'll regulate Coinbase. And this is at least the trend in Europe right now. So they're coming out with the fifth AML, KYC, anti-money laundering and know your customer directive in Europe. And this is where they're trying to go. They're trying to say we need to have clean Bitcoin, not dirty Bitcoin. And if you have clean Bitcoin, it'll be worth more than the dirty Bitcoin. So I would say
What is this? What is this? What is such a thing as clean Bitcoin?
a clean Bitcoin is one where you know every single transaction that has occurred with that line of signatures since the day that Bitcoin was created. Because if you don't have a complete history of that Bitcoin's life, then it could be used for tax evasion or money laundering.
Right. Okay. Well, obviously, U.S. dollars can be used for tax evasion and money laundering all over the place, and we don't really worry about that. So it seems discriminatory. If I say so. Yeah.
That's a great point, Fergus. But I do think that they're also trying to have a war on cash, and in some countries they've already won that. So the Scandinavian countries have already really reduced their use of cash, and I think that Europe is trying to go towards that direction in many countries. So personally, I would try to take a bit of a diversified position. My portfolio of cryptocurrencies, I would say that you don't really need to spend all day trading. You could just make small investments doing cost averaging where you put $200 or $300 per month, a small portion of your paycheck or a large portion, but I think it's better to risk a small portion per month, and you invest this into 5 coins or 6 coins. And if I were to do that, I would buy Bitcoin, Ethereum, Monero, probably a bit of IOTA, and possibly a few other smaller coins that I just find interesting, where I think that the development team that's making the coin is honest and ethical.
Right. There's just so much. Yeah, there's so much to learn about this, and I want to have you back on to discuss maybe passive strategies aside from just buy and hold, but other ways to actually generate returns. Mm-hmm. But why don't you tell us before we let you go some publications or books to help people really venture into this arena?
Well, I have to go ahead and promote myself first. I make a quarterly report on cryptocurrencies. It's called the Crypto Research Report, and that's cryptoresearch.report. It's for free, and it's available in English and in German and in Portuguese. And we try to make an unbiased viewpoint because we also are working at the fund, and therefore we cannot give direct investment advice, and we just try to give people facts and let them decide for themselves how to invest. And outside of our report, I would also recommend Andreas Antonopoulos' Mastering Bitcoin. I think this is a very good for people that really want to do a deep dive into the technology side. Also, there was a book published by 4 Princeton University professors, and I think the book is called Cryptocurrency Blockchain Technologies. And this book is available for free online. It's also a great book for people that just want to gain a broad understanding of the technology. Outside of that, I gain a lot of knowledge through YouTube because there are a lot of knowledgeable people that are just have their own podcast. And one example would also be the University of Nicosia. They have an online course that's for free. It's called the Masters in Digital Currency, and they have a new lecture every week where you can just ask any question you want, and they'll have an expert answer you for free. So it's really a great YouTube station to stay tuned to. Okay,
lovely. Folks, you've got a ton to digest there, and I too will be, I mean, this area obviously fascinates me, so I hope we can get more guests on to explore cryptocurrencies in the near future. Demelza, I will be personally subscribing to your publication, the Crypto Research Report, and I recommend others do too. So thanks again for your time, and we look forward to having you back on.
Well, thank you so much, Fergus, and have a wonderful day.